While all eyes are on Nvidia and Microsoft, one company is quietly emerging as the backbone of the AI revolution, Supermicrocomputer Inc. In the shadow of trillion-dollar tech giants, SMCI has carved out a unique space as the go-to provider of high-performance, energy-efficient servers powering cutting-edge AI applications. Though it may not dominate headlines, SMCI's influence is rapidly growing, and Wall Street is finally taking notice. In today's video, we'll explore how SMCI transitioned from a niche server maker to a central player in AI infrastructure. From explosive revenue growth and tight integration with Nvidia to next-gen cooling systems and custom server builds, this story might just change how you think about the future of AI hardware. If you've been sleeping on SMCI, now's the time to wake up. SMCI specializes in designing and manufacturing high-performance, customizable servers tailored for today's most demanding computing workloads. These servers serve as the engines behind generative AI, edge computing, cloud services, and enterprise-level data centers. Whether it's dense GPU racks or liquid-cooled systems, SMCI focuses on delivering performance and efficiency at scale. One of SMCI's standout features is its commitment to energy efficiency. Their modular infrastructure includes air-cooled, liquid-cooled, and direct rack cooling systems, reducing power consumption by up to 40%. Clients like Nvidia, AMD, and major cloud providers rely on SMCI's systems to support the massive computing demands of AI models, including Nvidia's H100 and AMD's Instinct MI300 5th GPUs. This broad compatibility with industry-leading chips gives SMCI a critical role across various GPU ecosystems. What separates SMCI from legacy server providers is its laser focus on AI-optimized systems. Traditional vendors often deliver generic solutions, but SMCI delivers high-density, configurable infrastructure specifically built for large-scale AI workloads. As AI continues to evolve, energy consumption has become just as important as raw power, and SMCI delivers on both fronts. Their innovation doesn't stop at performance. SMCI is among the first to offer turnkey platforms integrated with the latest GPUs. Whether it's Nvidia's Blackwell architecture, AMD's Instinct accelerators, or Intel's Gaudi chips, SMCI is consistently early to market with certified systems. Their close collaboration with chip makers and hyperscalers ensures that SMCI isn't just participating in the AI boom, it's helping define it. The numbers tell a compelling story. In the first quarter 2025, SMCI reported $4.60 billion in revenue, up 19.5% year-over-year. Over the trailing 12 months, revenue hit $21.57 billion, an 82.5% increase. These figures outpace legacy rivals like Dell and HPE by a wide margin. SMCI stock is up over 59% year-to-date, while HPE's has barely budged. However, rapid growth comes at a cost. SMCI's gross margin has compressed significantly, dropping to 9.7% in the most recent quarter, down from 15.6% a year ago. In contrast, Dell and HPE enjoy margins in the 20 to 30% range. SMCI is clearly prioritizing aggressive expansion over short-term profitability, a risky but potentially rewarding strategy if scale brings future pricing power. SMCI is leading the shift toward AI-first data centers with innovations like its rack-scale superclusters. These 52U racks support up to 96 Nvidia GPUs per rack, scalable to 768 GPUs across 9 racks, with integrated liquid cooling to manage power-hungry AI workloads. This plug-and-play infrastructure dramatically reduces deployment complexity and time to insight, making it ideal for hyperscalers and enterprises alike. Their systems are specifically designed to handle the compute intensity of large language models and deep learning frameworks. And unlike many competitors, SMCI integrates the latest hardware across vendors, be it Nvidia, AMD, or Intel, giving customers flexibility and reducing dependency on a single chip supplier. One of SMCI's biggest advantages lies in its build-to-order business model. Rather than relying on generic servers, SMCI assembles systems customized to each customer's exact workload requirements. This agility allows them to deliver hardware with cutting-edge chips weeks ahead of competitors, giving clients a crucial head start in deploying AI infrastructure. The company's direct liquid cooling systems are another major edge. Certified by Intel and aligned with Open Compute Project standards, these solutions slash data center power usage by up to 40%. Combined with ultra-dense configurations like 8 GPU and 96 GPU racks, SMCI enables customers to do more with less power, less space, less downtime. By supporting all major GPU platforms, SMCI ensures that no matter which chipmaker leads the next wave, they'll be ready with compatible, optimized infrastructure. Analysts are starting to take note. In recent months, Wedbush, Raymond James, and Loop Capital have all issued buy or outperform ratings. JP Morgan upgraded SMCI from underweight to neutral, while acknowledging the company's rising importance in AI infrastructure. Price targets have been raised to as high as $59 per share. The company's inclusion in major indexes has also boosted institutional interest. SMCI joined the S&P 500 in March 2024 and was recently added to the Russell 2000 and mid-cap value indexes. These moves have triggered significant inflows from passive ETFs and index funds, further cementing its legitimacy as a core holding. Despite its momentum, SMCI faces several challenges. Chief among them is intensifying competition. Dell, HPE, and original design manufacturers are all ramping up their AI server offerings, often with cheaper pricing and greater supply chain leverage. According to Goldman Sachs, this competition is eroding SMCI's differentiation and putting pressure on margins. Customer concentration is another red flag. In the most recent quarter, 2 clients made up nearly 58% of revenue. If even one hyperscaler scales back orders, the impact on cash flow could be significant. Analysts have warned that this dependence poses serious risk to SMCI's stability. Lastly, valuation is a concern. Despite trading at a 9 to 12x forward PE, SMCI's high-growth narrative has priced in near perfection. Goldman Sachs downgraded the stock with a $32 target, citing low margins, competitive threats, and aggressive assumptions in guidance. Bulls believe SMCI is positioned to become as vital to AI infrastructure as TSMC is to semiconductor manufacturing. With demand for AI-optimized, liquid-cooled server racks surging, SMCI's ability to ship over 2,000 racks per month and integrate the latest platforms gives it clear execution advantages. As AI adoption scales globally, especially among enterprises building their own private clusters, SMCI's infrastructure is likely to be in high demand. Even with execution risks, the long-term tailwinds in AI infrastructure are undeniable, with revenue projected to grow at a 40 to 55% CAGR through 2026. Many investors see any pullbacks below $40 as potential buying opportunities. Supermicro has made the leap from underdog to essential infrastructure player. With strong revenue growth, a custom-first business model, energy-efficient innovations, and deep partnerships across the semiconductor ecosystem, SMCI is helping build the foundation of the AI era, not just riding the wave. Of course, challenges remain. Competition, client concentration, and thin margins must be monitored. But if SMCI executes effectively, it could be one of the biggest beneficiaries of the generative AI boom, possibly evolving into the next great tech titan. What do you think? Has SMCI earned a place in your portfolio, or is the hype outpacing the fundamentals? Drop your thoughts in the comments. And if you found this breakdown valuable, don't forget to like, subscribe, and hit that notification bell so you never miss a deep dive. Thanks for watching, only on Stocks Telegraph.